Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian equity market witnessed heightened volatility last week due to geopolitical tensions in the Middle East and jump in crude oil prices, ultimately leading markets to close in the red. The Nifty 50 and Bank Nifty fell by 1.14% and 1.9% respectively, while the broader market benchmark mid-cap index declined by 1.33%, BSE small cap slipped by 1.12%. The week started pretty good with early optimism driven by progress in US-China trade negotiation and RBI rate cuts. Later was overshadowed by Israel launching a strike on Iran's nuclear facilities. For the week, Brent oil prices rallied 12.5%. India is one of the largest importers of crude oil in the world, and a prolonged period of elevated crude oil prices will result in a higher trade deficit. This may weaken the rupee, reignite inflationary risk, and erode corporate profitability by increasing input cost. Crude oil prices are highly susceptible to further spikes, with Iran being OPEC's largest oil producer. Any further intensification of the conflict raises concerns about potential supply disruption from the critical Middle East region. Higher crude prices are likely to impact oil marketing companies, which will face margin pressure, while input costs for paint and cement companies will also rise, impacting their profitability. Transportation and logistic costs will also surge across the economy. Volatility is expected to continue amidst upcoming US central bank meetings. The US Federal Reserve upcoming policy decision, scheduled on July 18, will be closely tracked as market participants look for clarity on the timing and the magnitude of potential rate cuts, especially in the light of mixed economic signals. The US Federal Reserve is expected to keep the interest rate unchanged. Technically, the weekly price action formed a bear candle while sustaining above the key support zone of 24,500, indicating extended breather. Further, it is important to note that despite elevated volatility, Nifty 50 managed to hold a key support threshold of 24,500 and stage a rebound. Thereby, in the coming week, holding 24,500 on a closing basis would highlight strength. If it is breached, bear will take over. Our analysis suggests in the last 4 decades there has been 6 major geopolitical escalation. On each occasion, it has formed a major bottom once anxiety around the event settled. Investing in such panic reaction with a long-term mindset has been rewarding as the index has witnessed double-digit returns in subsequent 3 months. So basically, if you invest right now, in 3 months you can get double-digit returns. In the current scenario, post the knee-jerk reaction, we believe the market would stabilize. Hence, we advise dips should be capitalized to build quality portfolio from a medium to long-term perspective. Structurally, the elongation of rallies followed by a shallow correction is a perfect recipe for a bull market. In the current scenario, over the past 21 session, index has retraced merely 1/4 of the up move. Slower pace of retracement is indicating a robust price structure that bodes well for the next leg of up move. On the broader market front, Nifty midcap is undergoing healthy correction after 28% rally, which should be used as buying opportunity based on the following observation. A. Since April low, midcap index has not corrected much, and on the weekly closing levels, it has not closed below its previous week's low. In the current scenario, despite ongoing volatility, the midcap index has been maintaining the same rhythm. B. The ratio chart of Nifty 500 by Nifty 100 has been inching upward, which clearly indicates relative outperformance of midcap. Also, improving market breadth as currently 55% of the stocks are trading above 200-day SMA compared to last month reading of 30%. Again indicates very well for the midcap market. Going ahead, we expect volatility to remain elevated, but good stocks will hold its value and continue going up. This year is going to be of small cap and mid cap, while selective large will only move. I will take a moment and share some good news. Waya PMS, which we introduced few months back, is now being ranked 7th across all PMS in India for May performance, where our return was 14.5% in 1 month on the aggregate level and 22.5% in the last 3 months. If you are keen to join, email us at support@thewire.com. That's all for today. Wishing you a profitable trading week ahead. Thank you.